Hey Sean, how you going?
Hey B, and hey Ality, how are you?
Good, thanks. How are you?
It's very good in unison. Cute.
Very
Yeah.
easy. Well, we're gonna just get started. So we've got Sean Driscoll here from Liberty, and the first question is, what do you do? What is a BDM? And yeah,
Thank you very much. Firstly, thanks for inviting me along. Very grateful. Yes, and to all the viewers out there, hello. Look, a lender BDM, so stands for Business Development Manager. My role is I'm employed by the lender, but my role is to help mortgage brokers and in turn help customers get their loan settled. Obviously, we discuss what we call the scenario, so the client situation. We get the green light that it fits policy and it can be done, even some exceptions to policy at Liberty. And then, yeah, from there, we get the deal in. And my job's to work with the broker, yes, to make sure the deal is approved and finally settled. So effectively, I'm on the side of the customer, making sure that the deal goes ahead as discussed. So, yeah, work in, the sales team from within the lender. Yeah, but if we've discussed it and we can do it, it's my job to make sure that that is achieved.
makes sense.
Love that.
Yes. So work very closely with all the mortgage brokers out there. So yeah, it's very enjoyable and yeah, enjoy hopefully making some dreams come true for many customers out there.
Definitely.
I think you do.
You do, Sean.
So
Two
why
nice
would
girls.
and should someone choose a non-conforming lender like Liberty over the Big Four?
It's a great question. It's a great question. Look, the big four do have, the greatest market share and have been around for the longest. But look, Liberty's been around for 21 years now. Very, very common in the marketplace. We even doing some sponsoring. We've just sponsored the Essendon Football Club for anybody watching out there. And yes, and we sponsored the Melbourne Renegades. So ever growing, always each year, the Christmas party, there's an extra 100 new faces that you don't know from the year before. So ever growing, and yeah, do lending in personal loans, commercial, self-managed super fund, residential. But look, to answer your question in the residential space, I guess Liberty's niche is the flexible policy, and yeah, even getting some exceptions to policy that makes sense. So Liberty can lend a higher loan size. Liberty can approve you with a smaller deposit, which I think we're going to touch on for the first home buyers.
Yeah.
If you've had a life event and you've had an issue previously, Liberty's happy to understand the situation and then obviously provide some finance where the banks, unfortunately, if it doesn't fit their policy, they just move you on and say bad luck. So Liberty, I guess, has a much greater appetite, shall we say, for lending and for helping customers. Yes, I guess with our policy can do a lot more than what the banks can do. And unlike the banks, we can also do some exceptions to policy if it makes sense. So look, in terms of the nitty gritty, there's a lot of detail involved in there, but as an overall high level factor, that is why you would probably use Liberty instead of a big four. Yes, your situation's a little different, you're self-employed, you don't have financials, you've had a life event, you need a bigger loan, you have a smaller deposit. Look, the list is endless, but there are a lot of examples of why people come to Liberty over the big four.
Yeah, so much more tailored, I think, sort of how it comes across.
Absolutely, much more flexible policy, and happy to hear listen to everyone's story and understand their situation before making a call. But yeah, much greater appetite is certainly something we can do. Still got all the online banking and all the features like a big four bank. And at the end of the day, we give the money out just like a big four bank, but we give it out probably more often than they would due to their tighter policy.
Yeah, that's really good to know, and good for first home buyers too, because I think they don't know the world, so they just naturally gravitate towards the big four because they don't know anything else. So it's nice to hear from a smaller lender for sure.
Yeah.
Well, not that small, but
Yeah.
No, we are a smaller lender. There's absolutely no doubt about that. You can say that we're about seventh or eighth on market share in terms of in order. So you got the big four, they're your top four, and then after the big four, we're about fourth or fifth. So ever increasing, and always looking to, I guess, climb up that ladder, shall we say? But I'm sure with the sponsorship that's been going on, and 21 going on 22 years now, we are ever growing, but yeah, certainly we're certainly not up there with the big four at the moment, but it's hopefully in a few years' time we will be, and it is ever growing, that's for sure. It's ever since I've joined, it's exponentially been getting larger and larger.
Definitely.
Yeah.
Very cool.
Love that. So the next question is about LMI, and I just wanted to give everyone a quick rundown in case they didn't know. So LMI is lender's mortgage insurance, which basically is just an insurance for the lender when people are borrowing usually over 80%, and it just insures the bank. It's kind of like a risk fee. Would you agree, Sean?
Absolutely. So what happens is if you don't pay your loan, the lender makes an insurance claim, just like a normal insurance claim, and the lender gets paid out by the mortgage insurer. Yes, for the client that I guess goes into liquidation, doesn't pay their loan.
Which is quite rare for the lender.
It is very rare,
but
absolutely,
it has happened.
It does happen. A bit like dry car insurance. It's obviously rare that you crash a car, but it's you need insurance in case something does go wrong. So that's why these lenders get this mortgage insurance for the high LVRs, because there's a lot more risk involved from the bank's point of view with a high LVR. Yeah.
So I know that Liberty does one of the highest LMIs I've ever seen. Can you explain how that works for a first home buyer?
Yeah, certainly. Look, so your LMI depends on the loan size, how much deposit you've got, a few varieties. If you are a first home buyer, it's a little bit cheaper as well, but can range anywhere from, $5,000 up to 30, 35 grand, depending on the loan size. So the banks need you to have the LMI plus 5% deposit. So, you're buying for 500 grand, your 5% is 25 grand. Your LMI will probably be another 20 grand. So you need 45 grand if you want to go to a bank. Whereas at Liberty, we will need 5% deposit, and it can be non-genuine savings. So mum and dad, you can have no deposit and mum and dad will gift you the 5%. So we need you to have 25 grand, but that is it. The LMI, I guess, goes into the loan. So you obviously your final loan amount includes the LMI, but we just need you. So from a numbers point of view, we need you to have 5%, which is 25 grand, whereas a bank will need you to have 25 plus the LMI, which is 45. So it's a big difference there for people that are trying to get into the market. It's a very hot property market at the moment. And if clients obviously have 20 grand and they decide to wait until they get 45 in 6-8 months, which is even a good effort in itself, to save up the 45, that property might be worth 30 grand more. They might have to buy the next suburb out, which is not ideal, further than what they wanted. So whereas Liberty, you just need the 5%. That is it. The LMI goes into the loan, and it's a huge benefit for clients who, want to get into the market. It's a hot market. If you're renting and you're worried about rent tenancy agreements ending and getting renewed and having to sort of sleep with one eye open, it's a vast different story compared to having your own home that you can call yours. So that's where Liberty is an example of our flexible policy that we were talking about earlier.
It's definitely my favorite policy ever in the world, and it makes me so happy.
Very popular.
Yeah.
Very popular.
Yeah, very helpful for first-time buyers. Gives them that extra little foot in the door to get into property market hopefully sooner than they might be able to otherwise. So thanks for explaining that, Sean. And just for first-time buyers, how does Liberty view employment? What's sort of the best way to someone to present their employment? Part-time, casual? How do you say it?
Yep. So with the LMI, so Liberty has their own policy, but LMI obviously, they have policy as well, and we've got to meet their policy at this maximum LVR. So their policy is if it's casual, it's 12 months. If it's permanent, it's either got to be 6 months, or if it's less than 6 months and there's no probation and you've come from the same industry, that is also okay. So I'll repeat that. Casual, 12 months. Permanent, either 6 months, or if it's less than 6 months, it's got to be no probation from the same industry previously. So hopefully that explains it. And if it's self-employed, you've got to have your ABN for 2 years. So Liberty has some other policies without LMI that require, I guess, not as much duration, 1 day casual and 1 day ABNs. But yeah, when you're looking at this LMI space, we've got to be bound by their rules. So that's their rules there to follow. So yeah, hopefully that is pretty self-explanatory. And yeah, any questions, let me know.
No, definitely. Yeah.
Love that.
Okay. Last question.
So what are your top 5 tips for first home buyers?
Top 5 tips for first home buyers. Geez, great question. Look, there's many things out there, but if clients, it depends. Everyone's situation is different. But I think everyone, no matter what their situation, would agree that it's certainly better to try and buy somewhere compared to renting. One, obviously, you can pay off your own mortgage rather than someone else's. As I said, 2, you're worried about lease agreements ending, things like that. And 3, I think we all take a little bit of pride in our own home compared to potentially, when we're living in someone else's. So, as I said, you don't have to have the full 5% plus LMI. People might be living, paying rent, maybe with a young family. It can be quite hard to save at times. So if you can get in, call your own home yours, and then obviously manage your cash flow that way without having to worry about, saving extra for a house, it can be a big burden off your back. So advice number 1 is you don't need the full 5% plus LMI. You just need 5%. Advice number 2, if mum and dad are able to try and help you out, or friends and family, or you sell a car, we can do non-genuine savings. So a lot of the banks make you hold your savings for 3 months, not Liberty. So don't wait. Prices, obviously, as we all know, are getting expensive by the day. So don't wait. If non-gen savings is not a problem with Liberty, speak to your lovely mortgage brokers at Clover Solutions, and they'll be able to sort you out. Look, in terms of other tips, look, just a little tip. If you are struggling to, I guess, afford where you want to live, you can always buy somewhere, buy where you can afford. So maybe buy a property further out and then rent where you want to live. So if you want to live closer to the city, but you don't want an apartment, you might be able to buy a house maybe in the suburbs, and then you can rent an apartment in the city, because I think we all agree there's a bit more capital growth with houses rather than apartments. So that's not a bad little tip. If you can't afford a house in the suburb that you want to live in, maybe you can buy one further out and then rent an apartment or a house where you want to live. So I think they're all saying is buy where you can afford and live and rent where you want to live. So look, that's another little tip. If obviously, you feel like clients feel like they're getting blown out of the market for, what they can afford compared to what the houses are going for. But yeah, look, I think, no sort of economist, but I think the best time to buy is as soon as possible. With the property prices, especially in the last 6 months, post-COVID, they are going, increasing exponentially. And with so many people wanting to buy and such little stock, it's the old supply and demand. So you don't need the full 5% plus LMI. You can get a gift from someone. And if you are struggling, maybe look at, as I said, buying where you can afford and renting where you want to live is not a bad little tip. But yeah, see a mortgage broker. You can do pre-approvals. If you are going to an auction, you need to have a pre-approval. So it's very important. Make sure, you see a mortgage broker. They can put you in touch with the best lender for your situation. Many lenders out there, and there's many different situations, and there's the best lender for everyone. Obviously, hopefully with that advice, you can get some finance and call a place your own.
Definitely.
Love that.
Awesome. Thank you so much for all that, Sean. That was very insightful, very helpful, and I'm sure our first home buyers will love the tips, the inside tips.
Look,
it's a huge
thank you very much.
A BDM.
Thank you very much. Yes, thank you very much for the invite and the opportunity. As I said to anyone listening out there, go see your brokers at Clover Solutions. They will sort you out. Hopefully it's a Liberty deal, and one day I can obviously help get that deal approved.
Awesome.
Very excited.
Thanks so much, Sean.
Thanks, Sean.
No worries.